Testing. Hey, welcome everybody. Trade Like Nick. Today is Wednesday, July 22nd. As always, I'm not a financial advisor. Everything I say or do on this channel is for educational, informational, and sometimes entertainment purposes only. I don't know your risk tolerance. Trading stocks and options can be very risky if you don't know what you're doing. So make sure you do your own research. And I'm not held liable for anything because this is just for informational purposes. So let's get started here. And I'm going to share my screen. And I want to announce that we're doing a new challenge. So I'm going to start trading stocks. I had a lot of people actually, hold on one second. I had a lot of people kind of get lost, myself included, trading options, SPX, day trading it, and realize that this is too advanced and it's too risky. And not only was I not able to meet my own goals, but I ended up actually gambling and not trading. I was actually doing what I wasn't supposed to do, and it wasn't aligned with my teaching. And so that's why I really want to make sure that we, and me especially, am held accountable to what I teach. So we're resetting this because trading isn't easy, right? This is a journey for me as it is for you guys. I'm here and you guys are here to hold me accountable, because if I can't actually do what I say, then what's the point? So this is kind of a journey, and I'm appreciative for everybody that is here. So today we're gonna start off with a $1,000 account, and you'll see right here, right? Actually, am I sharing my screen? And we are going to do earnings trades. We have Tesla and Google. The estimate here, right, is this is after the close, Tesla and Google. And if you actually want to see what the market is actually predicting, did you know that the market can predict what it's doing? So we see Tesla right here at 376. If you look at the options chain, people who are not familiar with options, look at this. It has an IV of 100%. That is very high. Look, everything else is in the 60s, 50s. This is the fear that's in these options, right? $22. You guys know what that means? Plus, minus $22. That means that if you go here at 374, it's expected to go up $22, which is at 397, or it's expected to go down $22, about 350, right? And if you look at the volume, what you'll notice is this is where a lot of people are trained to sell. They say, oh, you know what? Whoops, hold on one second. They say, why don't you guys sell a 20? Whoa, that's okay. Actually, hold on. Let me share my screen here. It looks like I need to get off and make sure I'm sharing my right monitor. So I'm going to stop sharing that, and then I'm going to share this screen. There we go. Okay, now we're back in the game. I was just talking to myself earlier. Okay, so now I got to share this. There we go. Okay, so we are trading Tesla and Google earnings. How can we make 1%, right? That's our goal. If we can make 1% a day, it doesn't matter what you're starting out with. That's why I minimize this down to 1,000. I want to show everybody can do this, because if you have $1,000, you can actually buy up to $4,000 worth of stock using margin if you're doing intraday. So right here, we're right at 374. You can predict, the option market predicts where the price will go. You say, well, how does it do that? Well, check this out. See this option right here? It only has 2 days to expiration. It's going for 100% volatility, implied volatility. Look at that compared to all the other ones, right? You'll see that it's a lot higher because this is going to expire in 2 days. And do you see where it says plus minus $22? This is saying that we expect the stock to go up or down $22. So if you go here into the options chain, you'll see that $22 away from what, 375, that's about 395, right? This is where a lot of people are betting. Look at the volume. Actually, a lot of people are betting 390. There's 14,000 today. On the put side, people are betting $22 down, which is what, 50, right? Look at the volume, 12,000 volume. So if I wanted to take this trade, I could actually take the opposite side, right? Because they're selling this, which means I think it's going to probably drop down to about 350 to scare them. And then on this side, I'm looking at 400. So 400, let's put this down, right? Are we bullish or bearish? Let's take a look at the past earnings trades. That's what you always want to do, is look at the past to predict the future using past price history, right? We want to use this to predict what we think is going to happen. So here it gapped. On this one, it kind of went up. This one down. This earnings down and then went up. So now we have another earnings. Are we going to go more on the lower side? And we saw what did we see on the volume on the put side, right? A lot of people are positioned around 350. Do you guys see that? So if you see that people are concentrated at, right? See that volume there, folks? That means look at this open interest, 7,400 versus like 1,000, 2,000, right? This means that 350 is where the market is going to want to go down to 350, which is the expected move of $22. See that expected move right there? Notice that's no coincidence that's where all the open interest. People are selling that, right? I might take the opposite side and maybe even buy it or just sell an iron condor. If I think it's going to go past, go to 350 but stop there, I could go maybe sell the 345s. So 350, and then on the top side, we said that the volume is at 19, right? So if we look at where all the action is, you'll see 19,000, 16,000 compared to all these other numbers that are so low, right? And what strike is that? That's the 400. So be wary. If retail is trading at 400, they think it's going to gap up there. For them to make money, it actually has to go up there plus whatever they paid for it. So I might look to sell the 405. So if I were to look here, 405s and 375. So if I go to 405s, right, I can look to sell this. Actually, let me get some more strikes on here. Let's pull them all, right? These are all bets. These bets are going to expire in 2 days. So the 405s is going for $2. So if I sell this for $2.20 and then I buy the 410 for $1.66, I could collect 56 cents on that side. And then I want to sell outside of this zone on the put side. We said 372. This one has high open interest. All the volume and open interest is concentrated at about 350, right? So if I want to sell 345, there is volume at 340. I might go a little bit cheaper and just sell the 335s. And buy the 330s as my hedge, right? So for this iron condor, I can collect 78 cents, right? What am I risking? So watch, if this trades, what is the break even? This is what we want to look at, is where is my potential area of loss? You always want to calculate what is your maximum loss and gain on the trade. So if you look here, break even price, see that? Is at 334 and 405. So what does that mean? 334, 405. So let's go back to here. Let me put in this order. Actually, before we do that, 304 is right here. Whoop. 304 is my break even on the downside. And what was it on the upside? 334, 405. 334, 334, 405. Freeway, people from LA, say what's up in the chat. If you from the, you know about the 405. People in LA, they like to say the in front of the freeways. Up here in the Bay, it's all about 101, 680, 880. Not the 680, not the 880, but down south, the 5, the 405, the 310. Oh, wait, that's the area code. All right, so Tesla, I told you, sometimes entertainment purposes. All right, so we go back here. We said the 334 is right here and 405 right here. So here, I'm just going to go edit and put in 405. The 405 is my break even on the upside. On the downside, the 334. Okay, so does this fit my outlook on earnings? If this can get in between here, if it gaps up just to 405, is it going to get up higher after earnings? Is it going to get lower? If it just stays anywhere within this range, right, I'm going to collect how much? I'm going to collect 79 bucks. How much is it going for right now, actually? Let me see. Unlock it. Yep, it's going for 79, right? If the mid price is 78, so let's put it in at 78. Let's just see if it gets filled at 78. Oh, duh, of course, because I sold it for less. I was thinking I was buying it. What am I thinking? So I probably, what did it get filled at? I got filled at 78 cents, of course. So I got paid 78 cents. What does that mean? That means this, that on the downside, let's zoom in and make this more relevant to our time frame. Remember, everything's always relative, right? Earnings play. We're looking at Tesla, which has earnings after the market closes at 1:15 Pacific Standard Time. What did we do? We sold the 405. What is that? That's this one right here. We sold the 405 and, whoops, I got to make this smaller. We sold, here, let's make this a little bit smaller, get everything in the range, right? So we sold the 405 and we sold the 335. 335. Let's double check, right? Our position here in Tesla, we sold the 335, 405, and we collected 78 cents. So we want this to stay below 405. Remember, we sold this 405 call, right? People who are bullish, they bought it and they paid $2 for it. I'm selling it to them to collect the premium. That's why I want to stay below here so that this expires worthless. I also sold the 335 put, collected a little bit of premium, and I sold outside. The expected move, this is important, folks, right? This is where I sold. Where is the expected move? You can see at the option, because I always want to sell outside the expected move, and I want to sell outside of where most of the volume or retail is. I'll even show you a cool trick. I could even buy the opposite side of this trade, right? Like if I thought that it was going to go over here, I could actually buy a cheap call spread and buy a cheap put spread. Let's see. Going to so what did we say the volume was at here? So we got 5 more minutes. All right, just curious here. I'm not going to do it. But if I thought that it was going to go down to where the volume is, right? You can see volume is right here at 340. So I sold outside of that. But if I thought that it was going to get to 340 to scare these people, I could actually buy the 45s and sell the 340s for 59 cents just to play this risk, right? For a high reward. So let's see if it gets attracted to there for an overnight play if it actually goes there. I could actually go and see that the volume at 12 at least to 400, right? If I bought the 395s and sold the 400s where a lot of people are positioned at, I could buy it for 90 bucks on the upside. So that's 90. Now, this is saying that it's going to get there. Let's see. Filled. So I have the 395 400 all the way out, and I only got it for almost a buck. See how there's a skew on the call side? The skews, you always trade richer than the puts because people always want to see it bounce going all the way up to 400, right? So I actually did the a bet that it was going to go up to 400. So that's my secondary bet, right? This is my up to 400 is my max profit tomorrow. But we have 2 days for it to get there, right? And then on the bottom side, oh, it's still working on the bottom side here. Well, it's going for 58. Here, I'll pay 58. Nope, I got to pay a little bit more. The mid is 60, so I got to pay 60 for this bet. So this is a $60 bet, right? A $60 bet that it is going to go. I got filled here 340, 345. So at 340, 345, how much did I pay? I paid 60 bucks. So the break even is if it goes from, I bought the put and I sold the 340 for 60, right? So the break even is 345.60. If you do the math, you always take whatever you paid for it, you add it to how much you paid for the spread at the strike. 345 plus 60. So 345 plus 60 is right about here, right? So we are betting that it's going to get to this area. And now we're going to wait till earnings plays out. I win if it expires inside of here. I collect the 79 cents, which will pay for this cheap bet, right? Remember, the credit I got was like 79. So it'll pay for this cheap bet. And I also have a cheap spread out here. So now you can see I have a diversified position. I sold out of the money, but outside of the expected range. And then I bought some cheap spreads to play the upside or downside movement, right? Because there's a lot of volatility priced in to these options. So that's why I want to do a spread. I don't want to just buy an option because then I'm going to be paying a lot of volatility, a lot of premium. So we got 50 seconds left in the market, right? This is trading is just positioning yourself when you recognize opportunities. And there's opportunities today in Tesla, and we have Google, right? If you look at Google, which has earnings after hours, the implied move in Google is what? 403%. Oh my gosh, $8 to the upside and downside. So $8, oh my gosh, I could sell a lot for Google. Look at the premium, even going into the close, right? Here, 2 days left, you can sell some of this. 14, 13. So the market's about to close, but look at this premium, $8, $20 move right here. Expected move is 20 bucks for these 2 days to expiration options. So you know there is some volatility in Google. 22 is right there. All right, folks. So that is our first trade for our new $1,000 challenge, right? We are now trying to make 1% a day. I placed 2 trades today, one in Google, one in Tesla, selling an out of the money spread and then buying a cheap spread in Tesla. We're going to see how this trade plays out tomorrow because this is a 1-day event, right? It's outcome based. Are they going to trade it up there? And then I'm going to put in a working order just so that you guys know, right? If this spread is ever worth 3 times as much, I'm going to get out. Same thing down here. And then I'm going to hopefully wait for these to expire worthless. So that is it. I hope you guys learned something. If you guys want to help support the channel, just subscribe. And my goal here is to teach you how to trade. and show you how to trade. Because if I can show you that I can make 1% a day over 30 days, 1 month, that's 20% a month. Once I can show it to you, then if you want to learn it, then we can do this together. So this is day one. Thank you for joining me. I know I had a reset there, and I want to make sure that anybody can do this with a $1,000 account. You don't need that much. As you can see, this spread only costs me buying power. Let's see. This only cost me 100. Look at that. I'm up $121. Only cost me in buying power 0.0 because these are debit spreads and call spread. See down here in Tesla, right? So the buying power is not even affected. That's why I have a lot of buying power left. If you see, there's $920 of buying power. So we'll see how this plays out tomorrow, and I'll see you in the next video. Peace.